on schedule. Well, welcome everybody. Thank you. Today we're going to be talking about green bonds with a set of distinguished experts that we have here, and I'm going to and a full video of the event will be available on our website in just a few days. The event and the Q&A are on the record as well. And for those of you watching online, as well as people here in the audience, you can ask a question for the panelists using the hashtag CGEPEvents and our Twitter handle @ColumbiaUEnergy. The reason I chose to gather this panel on green bonds is that this is a really rapidly growing asset class that touches energy in many different ways, but I think it's still relatively new to some energy specialists, so I wanted to just provide a bit of an introduction. When I say it's rapidly growing, over $150 billion in green bonds were issued in 2017, and that is compared to less than $5 billion just 5 years before that. So it really has exploded. And most of these green bonds are funding projects that are at least tangential to energy, so things like renewable energy, energy-efficient buildings, alternative transport. This is really an international phenomenon and has participation from both the private and the public sector. And what's been most striking to me as I've learned about the space is that some of the ambitions around the scope for future growth in green bonds are really, really significant. And the scale of that role and the sort of capital it could play in meeting some really ambitious carbon reduction goals as well is very important, I think. So as with any of the things that we'll talk about today, so what I wanted to do is bring together a sampling of experts who touch this market in different ways. We're really honored to have these particular three participants today, and I'm going to just briefly introduce them. First, representing investors is Olivia Albrecht. She's the lead investment manager for PIMCO's ESG business strategy, that's environmental, social, and governance business strategy. She actually has a really interesting and very international professional background. Prior to PIMCO, Olivia worked for Cerberus Capital in Germany, for Lockheed Martin, for Mubadala in Abu Dhabi, and for the US Department of Defense. And I would also be remiss if I did not add that she has an MBA from the Columbia Business School and a master's from our very own SIPO. Next to her, we have representing public sector issuers, Guillaume Pichard. He's from the Ministry of Finance of the province of Quebec. He's been in charge of the province's long-term debt issuance and risk management for some time, and green bonds fall under that umbrella. So he's actually in a really unique position to speak to the green bond experience as it compares to more traditional public sector debt issuance. He started his career in academia. He was a lecturer in the Department of Finance at Laval University before joining the ministry as a derivatives trader, initially near and dear to my heart. And then finally representing bank origination, if I could put it that way, is Christopher Flensburg. He's the head of climate and sustainable finance at the Swedish financial group SEB. And he has what I think is about the best job description I've ever heard, which is that he identifies areas where financial mandates can help solve social challenges. So what's better than that? He's really a pioneer in the space. He has a long history in the financial sector and has worked with the World Bank to develop ways for mainstream investors to be able to add climate objectives to their portfolios. And has earned many professional awards as well. So I'm going to leave it there, and did just want to say again for those watching online and listening to the podcast, my name is Catherine Spector, and we're discussing green bonds today. We're going to have a little conversation amongst ourselves, and then we will open things up to some audience Q&A in just a little while. We have a lot of interesting topics to get to, and I want to make sure we have enough time to hit on many of them, but I would like to just begin by asking each of you to just very briefly explain your role in this market today, and if you'd like to, how you got here, a bit about your history in this space. Christopher, would you like to start?
I can start, yeah. My name is Christopher Flensburg, as said, and I brought the idea of green bonds to the World Bank back in 2007, and have been one of the fathers of this market. The group I'm leading is a co-advisor. We have been advising issuers representing roughly 17% of the global green bond market. We've been working very close together with Guillaume as well. And the core in what we're doing, that is basically that we're being educated by our issuers. So the issuers have the frameworks, they have the background, and we're helping them to structure it in a way where they can actually talk to the investors about what they're doing. So that's quite a privilege. Over the last 10 years where we've been working with this, the bank have been in a transition. So it started off with me knocking doors and basically asking for slot times with the clients, with our colleagues. So it was very, very difficult to convince the clients. It was very, very difficult to convince the colleagues at the beginning. So in the beginning, we'll have a room like this with 2 people or 3 people or 4 people. Today, we'll have 500, 600 without a problem, whatever that being in Beijing, whatever that being in London, or here in New York. So that's quite a change. And that means that the challenge have been changing from being convincing people or actually allowing people to understand the financial proposition or the value proposition to actually managing a coordinated and harmonized transition. So that's the first part. The second part is that what have happened from the start to today. And I think from our part, it's basically the whole bank, every single employee that's beginning to see the value. And why is that? So the way that we have been gathering the intelligence we've gained from Guillaume and all the other issuers we've been speaking to, with all the investors we've been speaking to, is that we've been putting it in some kind of a database and trying to analyze what is actually happening. And for us, there's no doubt about the way that we consumed yesterday is unsustainable. We are using too many resources. We're creating too much damage, too much pollution. And alongside that, we're going to see another billion Chinese and another billion Indians that want to consume like us. That's a challenge. That's a challenge we're all facing. That's a challenge in many dimensions. One in respect to resources and pollution, another one in respect to the way that we're living in our social life. And that means that over the next 1, 2, 3 decades, we're going to see a shift where consumers and regulators will force us to change behaviors, will force a different consumption pattern. And that means that the way that we are doing finance will change as well, because that means the companies that's doing business in the old way are not going to survive. Meaning that we need to understand what it means to make inside this transition, and we need to create a communication tool which allow the companies to show how they are positioned in this transition. Green bonds is one way of doing that, but there's many others.
Thanks, Kim.
Sure. Just a bit of intro myself. You did a good. You touched on the main points. So basically, most of my time is done issuing bonds on capital markets, Canada, Europe, Asia. And a few years ago, when the green bond market started to picking up, around not as early as 2007, but around 2012, 2013, we started to work very seriously on the matter. Inside the government, at that time, we were really under budgetary pressure to keep costs down, so we couldn't really allocate new resources. So we took the hard road. We did with the small team we have. We did all the work ourselves. Tried to study the subject. Tried to see how a public issuer could come to the market, because at the time not many public issuers were doing green bonds. No provinces had issued green bonds. And we also wanted to bring to the market a very high quality product. We have a very good reputation on the capital markets internationally. We wanted to keep that intact and even improve it with green bonds. And as a government, you do have the responsibility to bring up climate change and to bring sensible solutions to it. And sort of in the process of learning about green bonds, we realized that green bonds are part of the solution to address climate change. They raise awareness is doing to address climate change and bringing new sensible solutions to it. So we finally issued our first bond in 2017. We have issued in Canadian dollars, and since then we've issued 3 other green bond issues for a grand total of 2.3 Canadian billion dollars. Our last one was our biggest one, was a $800 million issue, mainly in public infrastructures for public transit, looking to bring something new. And for the Canadian space, we're devoted to the market. We want to keep bringing new green bonds to the market as we realize the positive impact they can have on the environment.
Thanks. Olivia.
I'm Olivia Albrecht. I'm representing, I suppose, the asset management industry. PIMCO is a very large fixed income manager. We manage over $1.6 trillion of assets in the fixed income space. My role as the head of our ESG business strategy is to help design solutions for our clients that have sustainability objectives, whether that's allocating to green bonds specifically, or engaging with specific issuers to drive change across environmental, social, and governance factors, or reducing the overall carbon footprint in their portfolios. Whatever that language is that our clients want to speak as it relates to sustainability issues, we want to be able to provide solutions there. Our engagement with green bonds has been fairly deep for many years as the market has evolved, definitely. We do see clients interested in allocating to green bonds. However, we also see that clients and issuers are looking to broaden the definition of kind of impact-aware securities or instruments, thinking across the Sustainable Development Goals as an important framework for potentially issuing bonds beyond just green bonds, which is a part of the kind of overall Sustainable Development Goals, but thinking about more broad alignment of business models, revenue streams from issuers, whether they be public sector or private sector, to help drive our achievement to hitting the Sustainable Development Goals, which, as we all know, are extremely lofty and ambitious. So looking to ensure that the private sector is fully on board, sustainability practices incorporated into their portfolio management. We're in the bond space, so green bonds is a natural tie-in to the work that we're doing.
Thank you. I think that gives some good context for where you're all coming from and bond, what makes a bond green. Again, as a relatively new asset class, this has been evolving. Issues you see as being still up for debate. Olivia, I don't know if maybe you'd like to start, and then please others do jump in.
Well, I think from where the use of proceeds typically are targeted toward or tagged to a particular project that is climate friendly. How climate friendly gets defined, there are oftentimes accreditation organizations that help ensure that the use of proceeds are being used for green type projects. Any issuer could theoretically issue a green bond. So for example, Enel, an Italian coal producer, has issued many green bonds, and they've issued many sustainable development goal oriented bonds as well. So it's base. There are more third-party providers to ensure that there's consistency of what the standards are in the space, and I'm sure others on the panel can talk more about the standardization process. But that's generally kind of how that gets defined. Then the other key question is who is tracking the impact of the use of proceeds to ensure that issuers are complying with what they've said that they will do with those use of proceeds in their bond issuance process. So ensuring that there's an impact measurement component of it. Again, tying it back to the Sustainable Development Goal principles. Again, where in the green bond space, we've evolved over the past 10 years, which was kind of the Wild West in the 2007 period, to where we are today, where there's more standardization, more third-party providers providing that measurement component. We haven't seen that yet develop as much with the Sustainable Development Goals for those issuances along those dimensions, but you're starting to see that component as well, as ensuring that issuers are complying with what they've said they will do in that space with the use of proceeds for those specific
entities like Chevron or an Enel or Repsol with clear non-green interests as well, issuing green bonds. And how do you think about that as well?
So I actually, to answer that, I will go back to your first question. So what is a green bond? And in my world, a green bond is a promise to use the money for a specific purpose, and then it's an agreement. That's the reporting. Then there's a number of processes in between to assure. So if you're abusing trust, you lose access to commitment. And that's the base of a green bond. Now, if you have no downside on not delivering on the promise, then one can argue or one can ask whether we actually have a good foundation to issue green bonds. So that's one point I think is important to keep in mind there. So if there's no downside on not keeping your promise, I mean, if you're not benefiting from doing green bond, why would you do it in the first place? So there needs to be some kind of strategy behind it. That's the first part. The second part, which I think is much more important, that is that personally I don't think there's any chance that we'll create a transition like the transition we need without having an inclusive transition. We need to invite everybody. So the fossil industry is having millions of engineers, they're having infrastructure, and they're having capex without end, which can be used to the transition. So to create a black and white doesn't create a transition. So on the one side, I think it's extremely important to invite everybody to the table, and noticing that we don't all have the same role, keeping in mind that there needs to be a promise which is genuine, and that promise needs to be backed up by transparency, and that's called a issuance process. So I think there is room for everyone, but it might not be the rule of saying, okay, I'm green, but maybe it's the role saying, I'm also aware of this challenge with the pollution and the way we consume, and I have a role in that transition. So maybe you don't want to call it green, maybe you want to call it something else, transition bond, what do I know? But to have an inclusive dialogue, I think is required to be successful. That's my personal view.
That's an interesting point. Guillaume, before we move on, just very briefly, in some previous conversations, you've talked a little bit about how hard Quebec has worked to really properly ring fence the money from green bonds instead of intermingling them with other funds, and that has lent credibility to your efforts. Could you just very briefly tell us a little bit about that?
Yeah, absolutely. And one thing even I can relate to the first question, because when I said we first started looking at the green bond, we didn't have the green bond principles out there. That was a game changer for us. We followed that roadmap, which is, of course, use of proceeds, how you select your projects, management of your proceeds, and that's we worked a lot on that one, and the reporting part. So the way it's done for us is that when we issue on the market, the proceeds of the bonds, they go directly into our treasury, but in a separate account. We call it internally, it even have a green account name internally. So we know the only money that goes into the green account is the proceeds of the bond. The only money that goes out of this account is money that is going towards green projects. So that's our insurance to investors, and we took it a step further. We came up and we asked our Auditor General if they could actually assess that we're following our own process. After a few discussions, he decided the Auditor General was on board. We've got that on our website, the process assessment of how we track the money to the project. So we're doing an annual assessment of basically what money is left from the issuance, where it went to which project, and this is a dollar for dollar. We're actually following a dollar for dollar. From our green bond proceeds. And if I may go back to the question about the issuers, because if any issuer can come to the market and like let's say for example a Chevron or a BP, I would concur with both my panels that yes, I think they should be able to access green markets, but what I would encourage investors to ask these issuers is this a one-off bond? Are you just doing this for the visibility, or do you have in place a long-term strategy to move away and to go into really address climate change?
Mm-hmm. Thanks. Sticking with you for just a minute, Guillaume, your issues so far have been very well subscribed, and they've been Canadian dollar denominated, so not surprisingly, you've had many Canadian investors disproportionately, yeah. Although there's probably appetite for non-Canadian denominated issues as well. But I'm wondering within the geography, what types of investors have been most attracted to your issues, and have they cited certain reasons for why they've wanted to become involved, and has anything about that surprised you?
Well, when we first started looking at the market, and before really close to 2017 when it first came to the market, we engaged a lot with investors, most than for any other bond issue that I can think of. And we met a lot of accounts, Canadian accounts, and asked them, what's your definition of a green bond? What project would you like to see in there? And what's surprising about this is we've had dialogues with investors that are in our backyard, like daily, from the time we finally came to the market, which we thought like once or twice a year. So that the openness of the dialogue and the transparency of the market has been has been a net positive for us and for the investors. And yeah, we only issued in Canadian dollars, but the first one we had 40% out of Canada, and it was a 5-year bond issue. A bit less for a bit more close to 80% for the others, or 85%, but still great international penetration, because if we were to issue a 5-year Canadian bond on a regular market, we would get 90% of Canadian investors only. That speaks a lot. And we also, the way we issue our green bonds, we issue them in a global format. That's a bit technical in the market, but basically it means that it is marketed worldwide. So investors like, well, yourselves, you can easily put in an order in the book, which is different what we do for a regular Canadian issue. So we've noticed a real uptick in international demand.
If we could just zoom out a bit, Christopher, and get an international perspective on sort of supply and demand of green bonds and where you see it coming from.
Yeah, or actually going a little bit into the same question here, because I think this is essential. So back in Sweden, international perspective, we had 11% of all bond issuance last year being green. We were up at 16 at the top, but had to go down because we didn't have any more assets to issue. This year we were at 30% in Q1, meaning that it's massive. SEB, the bank I represent, had 25% of all issuance last year being green. So that is the transition we're seeing.
It's amazing.
The second country is Australia, the third country is Canada, with roughly 1.5% in issuance in green bonds. And what we're seeing, that is a very linear pattern. So we expect that Canada will be where Sweden is now in a couple of years.
Wow.
And the engagement and the initiatives taken by Quebec together with a few other issuers is essential for that. Because basically what happens that is that investors have a huge desire, you can talk about that, they're not really allowing you to sell your green assets to anybody else, they want that, right? It's going out to their banks and going out to the issuers saying, we want you to issue green bonds. And suddenly you're seeing more and more issuance coming out. And we're actually getting so far in Sweden. So we had 2 issuers that came to the market with non-green issues, which didn't have a transition plan they could talk about, which didn't get access to capital. And this was not kind of bad companies, it was fairly good companies, but there was a lot of question in respect to their fossil exposure and how it was handled, and they didn't have preparation for answering that, and consequently they didn't get access to market. So this is kind of quite interesting, and I think that we're going to see all markets moving the same pattern. So we have Sweden or Scandinavia being quite forerunning. We have Holland being quite forward. We have Canada moving there, and I think in 2 years you will be quite far ahead in that as well. We have Australia heading quite ahead, and I think actually I think that we're beginning to see some moves in the US which is going in that direction as well. I think that the initiative by Bloomberg and by BlackRock on TCFD and the drive there is turning the wheels, and PIMCO obviously.
Yeah, Olivia, on this sort of push versus pull, it's never a bad thing to have demand outstrip supply, I guess, for a while. But from the demand perspective, can you talk a bit about what sort of feedback you've had from your investor constituents? Are they really calling for this type of investment? And then in terms of performance metrics and what you're looking for there, you obviously, as an investment manager, have a fiduciary responsibility to maximize returns. So is that an issue that you need to think about in the green bond space? Do you apply the same metrics you would for any other asset class? Or is there a more subjective sort of calculation?
Yes. So there's certainly demand in this space. You can look at a variety of different statistics. If you look at mutual funds or funds tracked by Morningstar, and you see that the green bond dedicated funds have grown double digits for many years now. So you definitely see investor demand for green bond oriented portfolios. Let's just remember, as we're talking about green bonds, the whole global bond market is close to $110 trillion. The green bond outstanding total, to my knowledge, is about $500 billion. We had about $160 billion of issuance last year, which is a nice number. Maybe $190 billion is what we're working toward this year, maybe north of $200 billion total for 2019. So it's still a fairly small part of the overall marketplace. From an asset manager perspective or from a portfolio manager perspective, when we think about allocating to a green bond issuance, even for those clients that do want green bond exposure in their portfolios, we don't just accept any green bond issuance, right? Green bond doesn't trump fiduciary duty. Green bond allocations don't trump the analytical work that's required to understand the financials of issuers. And financials of issuers, or your traditional financial modeling of issuers, incorporates material environmental, social governance factors, their exposure to transition risks, their exposure to physical risks associated with climate change. So all sorts of different kind of data points get incorporated into our analysis of the issuer and then of the specific issuance. So for those of you that might be practitioners in this space, one of the major challenges in the fixed income market as it relates to sustainable portfolio construction is that a lot of the analysis for issuers across their environmental, social governance factors focuses on the parent issuer. So again, if we use the kind of Enel or Repsol example, we've got Enel, who has a very poor ESG score because it's a coal producer, and yet they issue a very attractive green bond that use of proceeds are doing very good things. What their motivation is, I mean, we spend a lot of time talking to Enel, their treasurer office, investor relations, their CFO, their CEO. I mean, they are trying to transition their coal production to a more sustainable business model. Coal production is going away. They need to figure out a new business model. So this is their path towards that transition. And so we have to identify in our kind of analysis, how do you differentiate parent issuer challenges versus the actual green bond use of proceeds. So we've built systems, technology systems, analytical frameworks to actually analyze the specific issuance as opposed to focusing on the issuer. That is by no means a small project. And for most research providers, there hasn't been that differentiation before. So there's a lot of work that has to go on to really isolating what is the issuance in this space doing, and how do you distance itself in a reasonable way from the parent issuer across that dimension. So all of that to say, we take a very sharpened pencil to our analysis of each of the green bond issuances. We don't take any green bond issuance in the portfolio. They may not be, that specific issuance may not be attractive for financial reasons, for valuation reasons, in which case we'll take a pass on that specific issuance, or it might not meet our standards for the greenness of the issuance. We might see it as inconsistent with where we want to see that issuer using their proceeds or having measurement associated with it. So selective. We see clients globally want to allocate in this space. Many think about having dedicated green bond allocations, and yet at the same time, when I rattled off some of the larger statistics in the global bond market, you just don't see that level of diversity yet in the green bond market where you can get a portfolio that's sufficiently well diversified across different sectors, different parts of the market, different parts of the yield curve even. So it's not a fully diversified yet marketplace overall yet, where we can see a lot of clients gravitate toward wanting dedicated allocations in specific portfolios to green bonds.
As we think about sort of lessons learned, now that you've all been doing this for a while in this space, Guillaume, we had the benefit of a prior conversation.
Sure.
And one of the things that was striking to me about Quebec's experience is how green bonds actually became almost sort of a vehicle for interdepartmental or interagency collaboration, which I thought was quite an interesting policy lesson. I'm wondering whether you see more scope for green bonds or green finance being essentially a vehicle that can be explicitly built into a large-scale climate policy? Or is it something that is still a little bit siloed in the Ministry of Finance? How far have your tentacles reached out?
Yeah. Well, there's one part of the green bond principles is project selection and how you do it. So internally, when we first looked at this, we said, well, if there's only finance who's putting the finger on the projects, where is our green expertise? So we reached out to environment to have someone on board our selection committee. And then the projects that made more sense for us, public transit, as I've mentioned. So public transit is the transportation department that has the contacts there. So we brought them on board. And finally, Department of Finance is not Treasury, so we needed someone on the Treasury sides actually to get the guy who has his finger on the number. What you don't want to do is raise a bond issue and then having someone at Treasury calling you back 6 months later saying, oh, that project is delayed. You're not, so you've just funded a cloud. Which you definitely don't want to do. We have a high reputational risk when you're accessing capital markets. So that was one part why the learning curve was long for us, because we needed to understand how they work, how we work. I'm an operation guy. I work on capital markets. I could be on a call next Monday at 3 a.m. For London, and I'm going to need some information from environment right away when they get in. So they sort of basically it's a culture shock between departments. But we've learned to know what the environmental department actually does at finance, which is a very good thing. I had no clue prior to that, which for my other job, which is a regular bond issue, I don't need to have contacts with environment, and environment never has to have contact with finance when I'm going on capital market for regular bonds. So we've learned to work with each other. And to get to your second part of the question, as a global policy, well, we've with environment, we're working a lot to get across our GHG reduction goals out there, putting it in front of people with the issuance of green bonds, as what we do not only for the bonds, but as an issuer, as a government. What is our goal? What do we want to reach to address climate change and bring sensible solutions to it?
Staying in this policy space, Christopher, you alluded to this earlier, but the type of energy transition and climate policy that the world needs will require a tremendous amount of capital. And I'm wondering what role policymakers have to play in creating an environment that is actively conducive to facilitating green finance. Are there roadblocks that could be removed? What can policymakers really do to foster the type of healthy market that will facilitate getting the capital out there?
So the way that I think that capital is working is that capital will always search for the perceived highest risk-adjusted return. So that is a couple of elements. It's a perception, it's a risk factor, and it's a return element. And that's basically the tools that the policymakers have to work with. You can work with the perception that there's risk of taxes on carbon, meaning that there's a negative optionality, which will be priced into the market. You can work with positive incentives like capital ratios or taxes, tax incentives on renewables or other issues, meaning that there's a positive optionality. You can work with stranded assets and transparency and consumer trends, which is another optionality. So I think that the perception is often driven by the optionality, right? So you have an expectation. The way that Wall Street is working is that it's competing on intelligence and converting intelligence into revenues. So the more you can inform Wall Street and the investment society about the potential changes and how they're going to impact the perceived risk-adjusted return, the faster the street will actually reallocate capital. So I think that it takes a pretty cynical approach and analysis on how capital works, and then in a very structured way start addressing that.
Do either of you have any comments on this, the role of policymakers in sort of facilitating deployment of this type of capital?
Maybe maybe a little
You're
bit.
technically a policymaker, Guillaume, so you
Well, I'm not an elected official, so no. At the end of the day, of course, it has a role. Look, for example, one of the challenges we have in the green bond issue is to get assets to finance. Why haven't we so far? Our green bond issuance is between 3 and 8% of our borrowing program, depending on the year. And why isn't that 20, 30, 40%? Well, because I don't have assets to fund. And that's where policymakers can play a role. If they bring us assets to fund towards green bond, if they make policy that can address climate change, then I will be glad to bring new green bonds to the market. I think they've worked so great so far for us. They've been an incredible tool to raise awareness and get visibility. And if you don't raise awareness, people don't realize there's a problem. So, policy makers can make a difference in here.
I mean, even just to your point, right, with thinking about your overall borrowing program, I mean, presumably there are other projects that you could pursue that have some sort of alignment to the sustainable development goals, whether they're water-oriented projects or access to healthcare or education or some other way of kind of thinking about the world's problems and how policymakers and private sector and public sector can come together and find solutions for them and then measure those solutions on a kind of consistent basis as well.
No, absolutely. There's one additional challenge for us is that when we're going on the sustainable side, those they have to be funded through income tax or taxes. We need the asset, but on the water solution, we'd have something look like, for instance, we're looking at energy efficiency in a category to expand, where we would have art assets like a Leeds building would be a good one. We're digging the numbers right now to see if we could bring something in this category. Don't want to overpromise and underdeliver. There's still lots of work to be done there. But we are looking to broaden the categories we can issue of.
I think that there's one thing more I would like to add, because you're asking what policymakers can make, but I think that it's important to keep in mind that individuals and institutions actually want to do this. So it's not a matter of pushing the industry, it's a matter of enabling the industry. So we're limited by our mandates, and we need to see how these mandates, that's why the reason why I'm talking about the optionality and the way of the finance is working. So what we are seeing is that we have more than 800 active investors in green bonds at SEB. We have met roughly 1,200 face-to-face, many of them 20 times and 30 times. And we have less than 5 people that said this is not interesting. Less than 5 out of 1,400, 1,200 and 1,400. So that's an extremely drive and willingness to do that. It's just a matter of what is my excuse for doing this? How can I as a person, and why would we as an institution do this? So I think that awareness is important to pass over to the policymakers, saying that it's just about creating an enabling environment. But to do that, you need to understand finance and how finance is working.
Can any of you speak to the opportunities for green bonds or sustainability bonds in developing countries to tie issues like energy poverty to sustainable development? We've talked a lot about green bonds in developed countries, places like Western Europe and Canada and the US and Australia. Can you speak to opportunities that you see in lower income countries? Or is that just not on the radar yet?
You see this in the emerging market space. You see more issuance coming from, unsurprisingly, the public sector at the government level. Less so in the kind of quasi-sovereign or even in the corporate side. Although it should be noted, of course, that China is a very large issuer of green bonds as well. And from our perspective, it's often challenging to ensure the use of proceeds have been gone through the same due diligence that Guillaume has just walked through in terms of separate bank accounts aligned to the specific use of proceeds, the projects, the level of granularity with disclosures and transparency. As Christopher said at the beginning, this is an exercise of trust and a promise. And so oftentimes that level of transparency is difficult, particularly at an emerging market corporate level, even at a quasi-sovereign level where there's an association with the federal government in some form or the other. So you do see some issuances from some of the larger emerging market countries where there's an alignment to the public policy strategies, so a climate strategy overall, working towards Paris Accord details or COP21 or any sort of kind of government national level policy making. You definitely see it. From an asset manager perspective, from an investor perspective, there are definitely challenges in ensuring that transparency is met. And then, of course, all of this is just an alignment of where the valuations are, what the market is pricing, and what the underlying use of proceeds are doing.
So from our side, we have had collaboration with the equivalent to US aid in Germany, the GIZ. Over the last 3 years, we had a PPP, which was about collaboration with China, India, Brazil, Mexico, so G20 developing countries on technical assistance and building green bond markets. So we had 72 sessions with more than 4,000 participants, and that was about transferring knowledge about what our investors require to be capable of investing back to the governance. And I think that what many developing markets are seeing that is that the green bond market is actually a very good way of creating a common structure for communication. So the green bond is requiring a user proceeds and a quality assurance, which is more in depth or more detailed than a traditional bond in respect to where the money is going. So it's a quite good way for these issuers to communicate the way that they have their governance models. So I think that many of the developing countries are actually quite keen to do green bonds, but then you have, as you say, you have the natural kind of perception about that you don't really understand what's going on. And that's, of course, something that needs to be mitigated in one way or the other.
Okay. I'd like to open things up to the audience in just a moment. And so I'd like to remind you, for those of you here in person, if you'd like to ask a question, please come to a microphone, which we will provide. And please do introduce yourself and your affiliation. For the sake of fitting in as many questions as possible, please do limit yourself to one question at a time and make sure it is, in fact, a question. And for those of you watching online, again, you can use the hashtag CGEP events and our Twitter handle at Columbia U Energy to ask a question. Before we open things up and give everyone a moment to think, that this may be an ignorant question, as I'm relatively new to the space myself, but is there yet much of a secondary market in green bonds?
Yeah.
And do you see that developing at all?
Well, the bankers should have.
I would say there's a very, very good secondary market on the bid side and a very, very bad secondary market on the offer side. So basically what we're seeing that is that many investors are buying a single green bond and a second green bond, and then suddenly they create a strategy. And at the second where they create a strategy, they're making a commitment to buy a certain amount of green bonds or a location of green bonds, and there's simply not enough supply. And that means that it's very difficult for for a portfolio manager representing an institution to go out and sell the green bond as the first one, because there's an institutional commitment to increase the holdings. So most investors are not selling the green bonds, but there is a secondary market on the green bonds. This is a plus and a minus, because as an asset owner, maybe even as a discretionary manager mandate for an asset manager, this is appealing, right? So you have stability, you can always get rid of it. But as an open-ended fund where you might get inflow, that's a challenge, because you might have to go out and buy where there's no supply. So it's having a little bit of a twist in respect to that. There's a lot of demand for the green bonds, and there's a little bit less supply on the global side. There might be regional differences still.
Okay, Thank you.
Yes, so said differently, your kind of the stickiness of the asset of the owner base of green bonds is higher than its brown bond equivalent. So oftentimes you see that the green bonds have lower volatility profiles than their brown counterparts because it's just not traded as much in the secondary market. So when you see market sell-offs, oftentimes the green bond is not selling off at the same kind of same levels. So you can see that would be an attractive characteristic trait potentially for a portfolio construction.
Yeah, because when that's a concern for issuers. For us, like in Canada, the way we usually issue is we issue 500 million, and we tap our bond until we reach outstanding of around $6 billion. That makes to very liquid, very transparent pricing. And in foreign markets, our minimum size for public issue is $1 billion. For green bonds, our minimum size is 500 million CAD. We can't tap these issues because we've got to tie these with assets, track the money. So liquidity is an issue. And pricing on the secondary market, what we've tried to do is to put as much banker friends on our syndicate. So even though they don't handle the bonds, they do get a piece of the pies in terms of fees, and so they are enticed to making a market on the secondary market. So that's one way we can address it. Bringing volume, minimum 500. Try to have as much friends as we can on our syndicate, and if not, if there's never an issue with liquidity or pricing, a lot of investors, they know our number. They call us and have a good, frank, open discussion about it.
Interesting. What do we have in the audience? Yes, in the back there.
Hi, my name is Rod Richardson. I'm the president of the Grace Richardson Fund. I noticed in the email that went out about this panel that you're doing today that there was mention of incentives for these kinds of instruments and regulatory frameworks that would help them. I'm wondering what you're working on in that regard and have in mind. And I'm also wondering if you're aware of the work that was done at Columbia University in 2017. There were a couple of working groups that developed, thought through very carefully the frameworks that would be necessary for tax exemption for some kind of clean bonds for private issuers, which is incredibly important, in order to activate the private sector in the green bond space. If you were able to apply tax exemption privately, it might have a very different effect than for governments because you have equity on the other side, so you can lower the cost of capital and also increase the return on equity, thereby encouraging both equity and debt investment. Are you familiar with the work that was done by the Sabin Center and SEPA Energy and Environment? Travis Bradford led some of that work at Columbia.
I will leave that question there, but I would just like to make a comment before going into this. What I think, which I personally believe is a quite important point, and that is that I believe that one of the biggest achievements by green bonds is the dialogue. So what have happened over the last 10 years, that is that there's not a single bank out there that's not capable of talking about green bonds. To be capable of doing that, they need to have people that understand this, and they need to have a strategy to implement that. And that is the big additionality, if you want, add-on that the green bond have created. They have created dialogue, as you mentioned, between environment and treasury. Yeah. And for us, we've been educated in a very, very different way. Now, if you're going to make this a financial instrument which is going to benefit, in the first row, the project, you're going to create a niche. There's pluses and minuses in doing that. So on the one side, you obviously want to promote by creating certain kind of incentives and having that optionality. On the other side, you want the whole financial market to understand the challenges and thereby pricing this in the risk assessments and the reallocation. So the way that we are seeing this as an additionality, that is that the green bond market until today, I'm not talking about tomorrow, but until today, have managed to mobilize human capital and the financial infrastructure to deal with the transition we are up to fronting. And that's quite a value. At the end of the day, what you get for money, that is resources, whatever that being raw materials or human capital. So I'm not sure that is necessarily all you want to see. That's just my comment there.
Unfortunately, no, I'm not aware of that work. I am based out of Quebec City, and I am my job is DCM, green and slash green bond. But to incentives, I can give you a bit of color into there's no fiscal incentives so far being talked of, as I know of in Quebec or across Canada as of now. However, one of the incentives and I think in the investor community, at least in Canada, what I've seen is that we do allocate the bonds to, we give not preferential treatment, but we do give the first look at, when we allocate the bonds, at investors who are involved in the space seriously, who are UN PRS signatories, who have made the job internally to set up green funds and to offer to their clientele green investments alternative. And I think investors who were, the first ones, the pioneers in this space, have been able to grow their clientele, and that is one very big incentive right now. We get, just for an example, last deal we done in last February, we got 2.4 billion of orders. We could only allocate 800 to assets. So of course, we are going to prioritize investors who are actually going to use these bonds to put them in their funds and offer green alternatives to their clientele. So the incentive is right now, where I see it, is that factor.
So from an incentive perspective as well, I mean, it doesn't necessarily have to come from policymakers and kind of a heavy-handed approach for creating that incentive structure. I mean, I think that you've heard that the asset base can be stickier, which is attractive from an issuer perspective. It's a diversifier because your investor base who are buying the green bond issuances are often not the same guys who are buying your brown bonds, if you will, or your traditional bonds. So you have a diversification perspective that's helpful, that is an incentive. There have also been some studies that show that those issuers who do issue green bonds often have a benefit across their whole yield curve on their traditional bonds as well. So they're benefiting from that perspective as well. And of course, there's any number of benefits that get associated from issuing in this space and being able to talk to your constituents about what you're doing in this space, and any kind of ancillary brand or public relations component of it as well. So there seems to be a number of different incentives that are already built in that seem to be driving issuance in this space. I think, to Guillaume's point, it's consistently about not having enough projects to do in this space. So again, just going back to the original comment that I had at the beginning about the Sustainable Development Goals, let's just broaden this umbrella out, focus on other projects that can get you similar benefits. We'll have measurement issues, we'll have transparency issues, and it's a promise, but it feels like we're in the sustainable or SDG space for issuance. We're in the same kind of time cycle that we were in 10 years ago in the green bond space, and so we're now just kind of pioneering through it. And at PIMCO, we're working with a lot of issuers to mitigate any concerns that they have about, what does it mean to issue in this space? How do you have transparency on some of these pieces? What are you really looking for? And just opening that dialogue. Nobody has the answers completely yet, but it just seems like we're getting to the point where there are only so many assets that can be tagged to green bonds. If we just broaden that a little bit more and think about all the other challenges that the global economy faces, we could probably get more issuance, and because there are natural incentives built into the market structure.
So it sounds like this is a question of incentivizing the supply side right now as opposed to the demand side, per se. Next. It looks like.
Hi, this is less of a question about
Introduce yourself, please.
Hi, my name is Drew Alexander. I'm just an interested citizen. This is less of a question about the actual instrument and more a question about the mentality of corporate America, the clients that you guys work with. So I hear from 2 states. One is Michigan, the other is from Texas, both of which lack a very strong public transportation infrastructure because corporate America, either the auto companies or the airlines, have lobbied against it. And so the question that I have is, what is the mentality of the clientele, the corporate America, to make some sort of sacrifice towards growth and the ROI in order to really address the issue of climate change? Because a lot of these companies invest in LED, in green bonds and things like that, but ultimately, in order to really address the root cause of carbon emissions, they sort of have to make a little bit of a sacrifice in their bottom line. And I'm wondering, have we gotten to the point where they're willing to make those considerations, or is it still always be growth focused as opposed to perhaps carbon emission focused, if that makes sense?
I don't know whether that's something our panel can necessarily speak to, but there's, if you have any thoughts on, we did talk a bit about quote unquote non-green corporates getting into this space and making room at the table to give them the capacity to make those changes incrementally at least. I don't know if anyone has anything to add.
I think we are seeing a change, and I do think that we will see corporate America coming in big time. But again, for anyone to engage, one have to appreciate the need to understand why they're doing it and what kind of value they're creating for their stakeholders, whatever that being on the one side or the other side. And that takes some time. It's about identifying the area, mapping it, finding its role, connecting the different dots, and then going out. But I think there is a change underway.
It looks like we have 2 questions up front. Why don't we take them both at the same time and make sure that we can fit as many people in as we can? And again, please just introduce yourself and your affiliation.
Hi, my name's Peter Burgess. I'm post-career, and I'm sort of developing a thing I call true value metrics. I'd like you to address the question of the numbering of ESG performance. It seems to me there's a lot of talk about ESG performance and the idea that if you have ESG, the value of your business goes up. Well, I would argue that yes, it does, but the idea that you can actually make more profit from a serious ESG program is just plain BS. I mean, the bottom line is you cannot make more profit by doing serious work on social and environment. What are we doing to measure things precisely? That's the
I'll let you mull that over, and we'll take a second question.
Yes. Hi, my name is Henrik Everson from Carbon Tracker Initiative. I hope you can hear me. In terms of the green bond, maybe the quick question is, when do we get to 1 trillion a year? And is that main obstacle here actually that companies, issuers are not bold enough? I think we heard also here today that there's a problem of finding assets. It's always about, well, we don't have enough assets we can go into. There's $26 trillion in fossil fuel infrastructure out there, which is very close to, will become stranded over the next couple of decades. That need to be changed around. Somehow that means a lot of infrastructure needs to be changed, and new infrastructure needs to be put in place. How and what role can both companies do? And are we in a need for, you can say, government? That was another question about that. That we have to build a kind of a TARP program for stranded fossil fuel assets that companies can sell, and then they can come in and invest into new things. Because stranding of all these assets seems to be the big issue for why a lot of the utilities and oil and gas companies are not really going ahead. BP, Shell spend $25 billion a year on building out their fossil fuel, $1 billion on new technologies. That seems to be wrong if they are to be part of the energy transition.
Well, there's a lot there, so why don't we start? I don't know if, Olivia, you want to defend ESG for a moment, and then we'll move on to the other questions.
So I'd be curious to see how you want to define like what is a very strong E or S policies, but I don't think anyone in the ESG community is suggesting a change from a private sector orientation where there's an objective of maximizing profits on behalf of shareholders to transitioning to a nonprofit organization that maximizes utility for social factors or environmental factors. When we think about environmental social governance investing and what we're demanding on behalf of our clients with the issuers is a focus on ensuring that risks have been properly mitigated, whether that's on the environmental side through the transition risks as we move from a lower carbon intensive energy market to what are we doing in terms of health and safety standards for your employees to ensure that you're not at risk for additional liabilities for, say, a mining accident with one of your sites. Or on the governance side, demanding that there are better risk mitigating structures within the organization to ensure that you have a governance policy in place that helps create a more sound business practice. So we're thinking about things within the construct of retaining the for-profit requirements of maximizing shareholder value, and yet at the same time focusing on these material factors that influence the company's bottom line, either through a risk component, where you may not have set up your business model to be adaptive enough to the transitioning landscape that we have. You might be at risk for additional litigation and liabilities in terms of the health and safety of your employees, or on the governance side of the equation. So it's a mitigation of risk components. And there's any number of examples that you can talk through. PG&E, which has many of those dimensions being hit, and they're in the process of going through bankruptcy filings. Or you can think about BP and others. Or it's on the opportunity side of the equation. Are these executives, are these business leaders sufficiently thinking about how to retool their business models to be more sustainable over the long term? And we see a correlation, and there are many studies that you can point to that say that those issuers, those senior executives that think more in the long term and have incorporated sustainability practices into their business models have a tendency of being better forward-looking leaders. They have a tendency of being able to have more flexibility with their business models and ultimately lead their businesses through a lot of these major transitions within their industries. So we're not looking at it from a perspective to say we need to see BP all of a sudden become a nonprofit organization that's maximizing environmental and social factors, but how are they incorporating these material issues into their business models, their thinking, their long-term decision-making. And there's certainly studies that show what the value proposition of that process is.
Maybe I can because I think it's a very important question. I hear what you're saying. I appreciate it. Just before I go into that, Henrik, 21 or 22, we get another trillion. That's a very
firm answer there.
21 or 22. To go, because I think there's a lot of substance in what you're saying, but I would like to give you an example of the way that we're working around this. And at the end of the day, this is about time horizon, right? So to create short-term profit with implementing the filter of ESG, which takes extra time and resources, you never get a better result. I agree. But when you go on the time horizon and create the net present value of the stability and the returns, then you do create value. Let me give you an example. So we've been working quite a bit on social and affordable housing. We all know, both in the US and in Europe, that we have suburbs which are run down. There's areas where many people wouldn't buy a house. There might be nice neighborhoods, but there's too high crime rates. There's health issues, employment issues, educational issues, which you might not want to move into, meaning that house prices are maybe 30, 40, 50% lower than they would be in neighboring areas. Now, that is a challenge which we've been trying to address back and forward. What we have done in Europe, and which we're working on right now, that is that we've done a pan-European social housing index. So we've basically been rating every single country in respect to what they're doing according to 50 questions on social housing. And we're seeing some patterns, we're seeing strengths, and we're seeing weaknesses. And we're also identifying that if one society could actually address question number 15 to 20, that they could actually improve that social housing program. Now, if that's the case, if we could systemize our approach to social housing areas, we can not only create inclusion and social wealth, but we'll also see that the house prices are appreciating to the neighboring areas. That is creating both social wealth and economic wealth. And that's what I'm talking about when I'm saying that's the way we need to address this in case we want capital to work. It takes some academic work to make sure that you understand what's going on. It takes some comparisons, but for a long, long time, finance have not been investing resources in creating the background which is allowing capital to flow that way.
I'm just conscious of time, so we'll do a couple questions at a time here. I know that we have a couple in the front, I believe, and a couple have been waiting in the back. Can you just, and Justin, did you also have a question? Or no? One in the front, and the purple blazer in the back. We'll take those two.
Yes, hi. Thank you for coming and presenting here. My name is Walid Abu Ghazala, and I work in Big Oil. Essentially, we do the invest, disinvest decision for Royal Dutch Shell, BP, and so on and so forth. And so our perspective is from the inside in terms of investment versus most of the financial perspective is from the outside on how you assess performance. My concern is when you're investing 10, 20, $30 billion in mega projects, capital allocations in mega projects, their typical historical performance, especially in transition projects that are complex, you're looking at not 10, 20, 30 billion in value, you're looking at almost half of that. When you invest $10 billion, the cost overruns due to the risks, you keep mentioning risk, but due to the risks are usually pushing these projects to 15 billion or 20 billion. And the average is 50. So you're looking at almost 50% over the cost in terms of performance. And these aren't our numbers. If you looked at Ernst & Young or any of the publications, you'll find this. To remedy this, past the BP Horizon incident, there's a lot of internal frameworks called advanced risk implementations, ARIs, that have been put in place to better assess these investments, see the impact of the risk on the bottom line, see what we could do proactively to address as the project is being performed, essentially, adjusting metrics, adjusting things in terms of being able to
So
perform.
can you just bring it around to a question
Yes,
so
the
we can get
question
other people in? I'm
is,
sorry.
I understand you looked at this from a financial perspective and external models. Have you considered modeling project performance from the inside out with things such as ARIs, advanced risk implementations, and the such, so that you could perhaps meet the two?
Why don't you guys get a start on that? We have a question with the purple blazer, and I do see the two of you in the back, I promise. Any responses to first, outside of the scope, perhaps? Purple blazer?
Sure. Hi, thank you. Thank you for the panel. My name is Elizabeth Halliday, research project cleantaxcuts.org. Very much enjoyed listening to you talk about how these bonds are issued based on trust, and if you abuse that trust, you won't have access to capital anymore. But yet Guillaume went one step further by saying that we'll have the Auditor General and separate accounts and a completely much more secure process for tracking these. Can you speak about how you came to that process and how it might serve as a model for other corporations and governments bringing these issues to market?
All right. Well, like I said right from the start, we did follow the Green Bond Principles, and I also want to thank my colleague from Ontario because they were the first province out of the gate in Canada, and we followed their path, and we exchanged a lot with Ontario, and I think the exchange were mutual, and we were able to improve each other's program over the years, and we, like I said, we want to bring quality to the market, and we have a high reputational risk when we face markets. One bad issue could bar you for a long time from capital markets, or cost you tons of millions of dollars on your borrowing program for the years to come. So we took our time. We brought in the Auditor General so no one could dispute. Even though that usually is a reverse. They usually come asking questions. We came to them knocking on their door saying, could you do this? And they agreed. They looked at the process, and they're on board. Every year they'll assess we actually put the money where we said we would. And one thing that we didn't touch much here is on the impact reporting. One thing is, at finance, you can imagine we don't have a sustainable team. And we don't have any resources to allocate or build up a team. So what we did We went out with partners, like when we're working with the REM, it's the case in the Dépôt Placement, who's heading the project. For the metro system, it's the Montreal's Transit Authority, and these guys, they have the teams in place. And these teams, well, when we first approached them, well, they were thrilled, because usually their work ends up in an annual report somewhere on a website, which, you know, if they're lucky, someone will actually read it to that end. So that's the reality. You know, no one really goes through every documentation. When we came to the market, they really were thrilled, because they understood that this was going to bring visibility to their to these numbers, to their work. So we engage a lot with these guys. We have a great collaboration. They're showing us the numbers. We're putting it annually on our website to show investors what the impact the project actually are going through the environments, like GHG savings, passenger usage, or just the general progress of the projects themselves. And like I said a bit early on, and that enables raising awareness. And when you raise awareness, you're tackling on the climate change problem.
I want to get the two more questions in the back. Thank you for being patient. Let's take both of those at once, and then I do want to give our guests an opportunity to just give some parting words as well.
Hi, Isuru Sen. I volunteer chapter developer with Citizens Climate Lobby. Just a quick question on the financial returns, the cost of a green bond, or the returns that investors require on green bond versus a comparative non-green bond. How do those compare, and how people are factoring in these other environmental, social benefits that you just mentioned? And what you mentioned carbon taxes as a means to elevate the potential return, financial return. What is that the main tool that you see to make high quality projects more attractive on a financial basis?
Good morning, and thank you for sharing the fascinating experience and perspective. My name is Charles Lill. I'm the manager of the Environmental Initiative at the Port Authority of New York and New Jersey. I have a quick question, and I just wanted to learn whether, because of the nature of green bond, have you heard of or considered democratizing the process to bring it to not just the institutional investors, and perhaps A, you could increase the stickiness, B, you could increase the transparency, and C, you could ultimately provide a kind of a path forward for communication between public, banking, and also private investors, as well as environmental communities.
So in terms of kind of where the bonds are pricing, I'll just do a quick one on that. They're very similar is the short answer. There's no premium or discount associated with issuing a green bond typically. Now, as Guillaume has suggested, there's a cost internally for going through the exercises that he and his team have gone through to ensure that they've got all the processes in place, and so there's a bit of cost associated with that. When we talk to our bankers in terms of how they interact with issuers on the topic, there's a little bit of a hurdle to ensure that issuers don't feel like there's a extra cost associated with kind of auditing this process, setting up these bank accounts, going through all these different procedures to ensure that they're complying with green bond standards. But when you see the issuance in the marketplace, they come in pretty much at par with their non-green counterparts. That said, in the secondary market, we just talked through all the stickiness factors and all that, and the other incentives in terms of diversifying your investor base. When we think about environmental, social governance factors, to your second question, we do a very analytical framework. We've built out our own frameworks for each of the different sectors, evaluated what are the material factors for, say, the automotive industry versus a banking industry versus utility companies, try and build as much as possible kind of these analytical, quantifiable frameworks for analyzing. And then we've built our own scoring system, so that we've got, an E score, an S score, and a G score for each of the 2,500 issuers that we have covered today. So as much as we can, it's a very analytical process. That said, I think to Christopher's point originally or earlier on, it's a verification process or a promise and a trust associated with it, but it's also a way of engaging with the issuers. So a key part of the work that we do is not just analyzing these factors from our desks in Newport Beach, but actively engaging with the issuers that we cover, having the dialogue with them, saying, is this a one-off issuance in the case of a green bond issuance, or is this a systematic approach to your thinking on climate risk, or is this a systematic approach to long-term transitions that you're making to your business model? So using it as a framework for engagement with issuers as well.
Maybe on the pricing. When we approach the market, first off, we have a very transparent and very liquid curve. That meaning that if you want to know where a 5-year Quebec bond trades, you can, dealers will tell you precisely at the cent where they're trading right now and every minute of the day. So it's very transparent. And when we come to the market with a green bond, to issue through that price or at a better price for us, we are cognizant of the fiduciary responsibility of institutional investors. So basically, it's an offer demand game. We let it decide, but we're always cognizant of where our non-green curve is trading. You don't want to reprice the market for. You don't want to reprice billions of dollars of bond for a $500 million issue. But you do know, like, there are costs internally, so we're not, there's been a slight difference, or maybe we issued a little bit better than a non-green on that day when we came to the market. But for now, that's the marginality. On the secondary market, that's a complete other game. They are trading through like 5-6 basis points compared to our non-green curve.
So I will then go into the second question. First of all, I think it's very challenging for issuers.
It is.
Because you have the option to price through. So you need to find the internal argument why you don't take that opportunity. And I think that's the halo effect, where you actually get a benefit on your whole funding, right? But on the second question on transferring this to other communication, I think that there's a couple of things which are driving this. I mean, first of all, we as individuals wanna engage. We as institutions representing finance need to engage. We need to re-engage with society. We saw the disaster in 2008, and we don't want to go there again. We actually need to recreate some dialogue. And this is a good instrument for doing that. So I think that's on the first side. So there's a very strong drive behind this. But there's also another factor which I think one shouldn't forget, and that is the change we're seeing in transparency. So on a global scale, we're all exposed. So if you're making an investment in Thailand, American investors will know about it within a day or within a week. So there's a need for investors to do a more prudent work in respect to where the money is going. And I think that the way that you're using a language for user proceeds and creating a quality control around that is going to be copy-pasted across products. Because this is not only about green, this is also about actually having a responsibility for what we're building with the money. And through transparency, your stakeholders will suddenly know what you're doing with your money. And that is also a driving factor in this whole thing. So I think that it's not only an idea that this is something we should do. I think it's going to come all by itself. I think we're going to be forced to it, which is a good thing.
Thank you. I'm conscious of the time, so I'm afraid we have to cut off questions. Thank you all again for joining us. As I mentioned, the full video recording of the event will be available on the CJEP website in a few days. I also just wanted to flag that this is just one of many events that we hold. The most important of which I should mention next week is the 6th Annual Columbia Global Energy Summit. A very illustrious group of people will be joining us, including Neil Chatterjee, chairman of the FERC, Carlos Curbelo, former representative to the House from Florida, Heidi Heidkamp, former senator from North Dakota, Dakota, Jay Inslee, current governor of Washington, a number of CEOs of leading energy companies, and perhaps of interest to this audience in particular, Kyung-Ah Park, managing director and head of environmental markets at Goldman Sachs. So you can find information about all of those on our website. With our last just few remaining minutes here, if there are any parting words, final points that you all would like to make. Olivia, let's start with you.
Oh, I'll keep it short. Hopefully, in years to come, we'll see the $1 trillion number that Christopher said, and hopefully we'll see a broadened umbrella so that we can get more assets under the rubric of kind of sustainable investing practices, so that we have more to buy in the market.
Sure. I'd like to thank everyone in the audience and just closing up that the green bond experience as an issuer has exceeded every expectation we had in terms of visibility and performance. So if there are issuers out there who are on the sideline just hesitating, just reach out, and we'll have always open for a chat on it.
And as an intermediary, I would say that the drive that we're seeing from investors and the support we're seeing from issuers, it's a privilege to be a part of it, so keep on.
Well, please join me in thanking our panelists. Thank you all so much. That was fantastic.
Sure.
Really, really interesting.
Thanks a lot.
I do have something for each of you before you get mobbed here.